Let's look at the stock market. We're going to take a look at the S&P 500. I'm also going to add in the look at the Russell in here as we look at our multiple time frame analysis that we do. We're going to switch over here. I had the silver chart up. I'm going to go to SPY and show you the conditions that we have in here in SPY. So this is the intermediate chart. This is the S&P 500. It was only a few weeks ago that I was saying that we're in the area of resistance for this market where there was really a wall of confluences up there, and we were likely to get a decline. That was something like about 4.5% to 6% that the S&P 500 may lose as much as 250 points, which would be about 6%. Now what we see is that it is now down about 220 something points, so it's gotten really close to our objective. Just take a little bit more of a look at this big rally that we had in here. When you get these fantastic strong conditions where the cyclical periods only give you a small window of declines, as you see 1, 2, 3, and 4 of them right in here, you have a condition where the money flows for the long term are extremely positive. And that's what keeps these formations so positive that we have in here. And the formation that we have right now is very positive when we look at this. It's in this area of minor supports and intermediate supports. We thought it was possible that it would get down here to about 445 on the SPY. It does look like it's going to do that. If it really wanted to get a little panicky, you see this 34-week moving average coming up, which tends to be kind of a magnet for it, and that comes out to the 61.8. That's about 440. Our short-term analysis is suggestive that this decline isn't over with. And there are a couple of opportunities for lows. One comes out to the December 5th to the 11th time frame, and one of them is out in the first week of January. So we could get a minor bottom, we could get a rally, and then another sell-off into the beginning of January before we get into this more favorable period. Now, if you caught the beginning of the show, we said that we thought that investors are all in, and I showed a chart on that explaining that. While we think that there's these formations really speak to the fact that we will take out 473.54 on the upside, you can see we do not expect that it's going to take it out by much. And what will happen is that come out here in the late winter and spring, there is a lot of susceptibility to downside in the market. So we're really taking an intermediate look in here for the next 1 to 3 months as we look at this, and this really looks to us like we'll see a low, we'll get a Christmas rally that doesn't look very good, very, very choppy, and then sometime maybe in January we get an upward lift from whatever low we get in here to this period of testing. We think in the top of the market where you get a little more complex top. Most bull markets are complex when they top, and you can see our projection way out over here because we think that 2022 is a bear market year. So while we're getting these positive formations that you see in here, the likelihood is still that each of these cycles and the next one coming up will give you a higher high. It would take a very large decline right now, which is not likely in this holiday season for that to happen. For the S&P 500, the conditions are for the intermediate term, momentum is positive. You can see the momentum indicator right in here. The cycle pattern is positive. It's still giving you a bullish configuration in here, well above this low over here, though there would be a lot of danger if it got that low below 420. That would give you an indication the top is already made. And the phase that we're in now is a declining phase in the market right over here. It's declining or corrective as we are in a correction. We use the word correction differently. Correction to us doesn't have to be 10% or more. It has to be in the proper phasing that we look at in our analysis. And on the short term, well, it got downgraded because momentum went down to neutral important supports were broken. Cycle pattern, therefore, is negative, as you can see. The phase is declining, and that next trough is December 5th to 11th. So in other words, we're looking for a short-term low coming next week. And then we're looking for an attempted rally, but it might give you a feeble or choppy rally throughout the rest of the year, with some risk of coming down and testing or taking out those lows in the early part of January before we get into this more favorable period. Now, I want to switch to the Russell because there is so much damage underneath this market that I want you to consider. The Russell has done some damage in here. The decline in here is 13%. It gets under that 78.6%. And the configuration of this is suggestive that it will rally, but it will struggle in the resistance zone that we have put in right there. And that's what our projection is, that in that period in January, maybe into February, that it'll be able to rally with the market. But this really looks like that the bottom tier of the market is in a lot of trouble. Also, while the S&P 500 momentum is still positive, we have a negative turn in momentum in here, which is negative. So the Russell is much worse. Let's just look at the conditions that we're looking at in here. I went out too far for you to see that. And bring this right over here. So the Russell 2000 conditions, the intermediate term momentum is negative, as I showed you right in here. Cycle pattern is still positive because this low is still above this low. However, it is neutralizing because it got under the 78.6. If it gets under 2707, it will declare a bull market peak is in place. And it is not that far from that right over there that I put in the wrong number, 2107. I'm sorry, not 2707, 2107. Let me fix that because I don't want any people to say, what is that, 2107, 2707, 2107 at this low right over here. That is the breakdown and indicates a major top is in place if it gets down there. That would be about 57 more points, and at the rate that this is falling, it could easily get there. The short-term conditions, momentum is negative. The cycle pattern is negative. The phase that we're in is declining. The next trough is December 6th to 14th. And then again, there's a potential for one in early January. So all of that points to the likelihood that the market will continue to struggle into maybe well into the beginning of the year, with a likelihood of a choppy rally attempt for the holiday period coming up starting sometime late next week or the beginning of the following week, and then probably rallying into Christmas, into that time frame, the holiday season, and then some risk coming out into the very, very beginning of the year to test or take out whatever lows that it makes right now. That information comes off of the short term, which is available to our members that get our Future Speak on Wednesdays, where I go over all of this in depth. Of course, also including the NASDAQ, which I'm not going to show to you today. So that's a look at the stock market. Really, the sum of the evidence says that we are in this intermediate declining phase that has basically met our targets on the downside. A minor low due, an attempted rally, and then probably another low coming in the beginning of the year, and all of that pointing out to a test of the bull market peak sometime in the first quarter of the year. That is our look at the stock market. I hope you found it unbelievably interesting and everything in the show. Don't forget to go, if you're watching this on YouTube and only watching this clip, go look at our Christmas specials, that little video that I did earlier in the show. You can give the gift of askSlim to yourself or to anybody else, and it is the best opportunity that we ever offer for you to do that. And we give you a gift back of an Amazon gift card for buying that gift. So please do give the gift of askSlim. Thanks for watching that askSlim special video. Now take a quick peek at our annual askSlim holiday special. Great holiday gifts for traders and investors. Give the gift of askSlim. These are our special rates. In fact, the lowest of the year for 3-month memberships, and they are non-recurring. So if you give this gift to somebody, you won't get billed again, and they won't get billed again either. Give the gift to someone you know who loves trading and investing, or give the gift to yourself. It's great for first-time members at askSlim.com to really see what we do. Use this special to try a higher level if you're already an askSlim member, and do that for 3 months. And then we're going to give you a bonus gift. We're going to send you an Amazon gift card that's going to help you pay for part of these memberships that you give to somebody or give to yourself. Let's take a look as we go to the askSlim page in here. And this is the main page, and what I want you to do is to go to the very top, as you can see, that line for our holiday specials, and then click on this little green box, save 30% or more, and that's going to take you to our special holiday page where we have these offers, and you'll be able to see that there are 4 different gift options, and those are for our level 2, 3, 4, and 4 plus members, and you can see that we're going to give you back an Amazon gift card depending on which one you take for level 2, level 3, level 4, or level 4 plus. So if you take level 4, you're going to be able to get a $100 gift card back for that 3-month membership. And then we have the list in here of everything that's included in each of those memberships, just a tremendous amount of content that is both educational and analytical. There's no place you're going to learn more than what we teach with our amazing staff of 4 analysts that teach you all of the time the great things you need to know about trading and investing. So please do go to askSlim.com and take a look at those holiday specials and give that gift of askSlim. Thank you very much for listening.